In this video, we're going to go over Roundhill's WeeklyPay ETFs, more specifically WPAY, because not only are you getting weekly income with this lineup of ETFs, but you're also going to be getting that amplified exposure, because many people, they don't want ETFs that drop in price over time. And if we do have a really good bull market, we want our ETFs to rise in price also. So a lot of people, they thought they were income focused investors. They didn't care what the NAV was doing, but people want steady NAV or even upside growth in good markets. So that is what WeeklyPay ETFs have been doing so far. And we can take a look at all the charts, the NAV, what exactly it has been doing following the market. So what is WPAY? Well, it's by Roundhill Investments. A lot of people have moved over from YieldMax ETFs to Roundhill because they have been focused basically on what investors want: weekly income as well as a stable NAV. Now, a misconception is a stable NAV is never going to drop in price. That's not true. In a bear market, any ETF is going to drop in price. That's just the nature of holding these underlyings. But that's just okay, because if we have a bull market, we're also going to get a lot of that exposure and we're going to be rallying with these market gains. So we can see in this lineup, we have a bunch of single stocks ETFs, because these are all going to be their WeeklyPay ETFs. They have quite a few now. Right now, they have 21 ETFs, and this is a fund of fund ETFs, by the way. It's going to collect all of their single stock ETFs and have equal weighted exposure. And if you've been following my channel for a while now, I am a big fan of diversified portfolios. Now, not necessarily diversified in the sense where it has a million stocks under it, but as long as it's not a single stock ETF, so say AAP, which is based off of only Apple, it's too much risk for my personal risk tolerance. So a lot of people, they do like these single stock ETFs, and you can invest in them if that fits your risk tolerance in your strategy. But for me, I like having diversified portfolio, and WPAY, which is going to be their fund of funds, is going to have all of these, which is a very good thing. So what's very interesting is recently they added 2 new ETFs to the lineup, which is going to be related to gold, which is going to be the GLDW Gold WeeklyPay ETF, as well as GDXW, the Gold Miners WeeklyPay ETF. And I think these are some pretty good additions to the portfolio. We want as much holdings as possible, and gold, getting exposure to gold in a portfolio like this is going to help diversify a little bit, especially since a lot of these companies inside of this portfolio is tech related. So very high concentration to tech. So it definitely is going to follow the NASDAQ 100 quite closely, and balancing out with some gold, maybe some other companies down the line, should definitely help. So why would we invest in WeeklyPay ETFs? Well, as I mentioned earlier, a lot of investors love weekly distributions. A lot of people are using these as income to help supplement their current income, because inflation has been pretty rampage lately. The dollar is down at 9% this year alone. So a lot of people living paycheck to paycheck may consider some of these ETFs to help build up an additional income source. So weekly distributions definitely helps with that. And then, of course, you're going to have amplified exposure. One thing we want to note is it is going to be a little more volatile, because you are going to have 120% exposure to the underlying. So 1.2 times leverage. That is something to keep in mind. Now, in my opinion, that's not too bad. It's only a tiny bit of leverage. Now, a lot of people love to use margin. So instead of using margin to buy your favorite ETFs, just buying this one ETF, you're going to have a little bit of leverage, and you don't really have to use margin in this case, and I probably would not either. And this combines to a powerful combination that's going to provide a potentially powerful combination using leverage and weekly income, and so far it has been performing quite well. Now, if we take a look at the chart for WPAY, we can actually see it has 1.3 million volume as of last Monday, but we also have $500,000 assets under management, or $500 million, which is kind of crazy. It's definitely rising in popularity. The expense ratio is lower than ULTY. It's 0.99% versus ULTY, which is 1.30%. So it's quite cheaper. You're getting a better ETF, in my opinion, pays out weekly. And you also have, take a look at this chart, you're going to have upside growth. It's up 6.55% since September 4th, which was the inception date. So only 2 months now, and it's up 6%, which is absolutely amazing. And it actually goes to show that it does have upside potential and capture, which is a very good thing. Now, of course, you also have downside risk with any ETF, especially since you have 1.2 times leverage. It may drop more than just holding the underlyings directly because it is going to have amplified exposure. So we can see it's gone from $56 per share all the way down to $51 per share from August, the first week of August, all the way to August 22nd. So that is something to keep in mind. I did have a nice little drop, but of course, if the market rallies, you are going to see all of those gains back. And that's what we've seen with the NEOS ETFs, actually, with QQQI. When the market dropped with that ETF, we saw it rise right back up with the rally after Liberation Day. And if you want to check out Roundhill's website for their WeeklyPay ETFs, they have everything laid out pretty clearly. And I think Roundhill does a pretty good job kind of giving you everything you need to know about these ETFs. One thing that we don't really know too much is that it's not actually using option strategies. It's using a new over-the-counter strategy called swaps. So a lot of people don't have access to that and are not really familiar. But whatever they're doing, it's definitely working. And a lot of people are seeing some really nice gains and distributions week over week. And if we take a look at the distribution rate, speaking of it, we have a 54% distribution rate. So compared to ULTY, which has been consistently about 70 to 90%, we can take a look at the chart. It's been paying out 9-10 cents per share every single week for quite a while now. And that has made ULTY a very consistent payer in its cash amount for its distributions. And that is good for income-focused investors who don't care about the NAV. But if we take a look at the NAV, speaking of it, it's down 10% in the past month, and a lot of people are not very happy. Now, with this ETF, the holdings are going to change quite often, and it's all dependent on the fund manager for this ETF. How well are they choosing the right companies? And if we take a look at the companies, they're very speculative companies, very volatile. A lot of risk is involved because if these holdings, these companies don't go up in share price and it actually drops, you are going to see some significant losses in this ETF as well. And they're choosing these very speculative companies because it is going to get out the most premium from options trading, which translates to a high distribution rate week over week for investors. Now, if we take a look at the distribution history for WPAY, on the other hand, it's kind of all over the place. It really just depends how the market is doing, but it does seem like they have a good strategy in place to not only pay out some pretty high distributions, but if they have to sacrifice distributions in order to preserve the NAV, they are going to do that because we can see it's at a 54 distribution rate, where previously it was around 70 to 80%. So they definitely lowered the latest distribution in order to preserve that NAV. And that's honestly a good strategy. 54% is definitely a high rate for sure. And as long as we're getting our distributions week over week and we're not seeing constant decline over decline in the NAV, a lot of investors are going to be very happy. And one thing to note is the expense ratio is actually 1.28%, but it does have a waiver to 0.00% for the management fee portion until at least September 30th, 2026. So you have a full year where the expense ratio is going to be just under 1%, which is very nice to see. It's pretty crazy to see it's already at $500 million assets under management. So this is definitely a very favorite and popular ETF, especially in the Reddit communities. A lot of people are talking about it. A lot of people are dumping ULTY for WPAY, and that's not necessarily a bad thing. You want to choose the best ETFs that fit your lifestyle, your goals, as well as your investment strategies, because these are all actively managed ETFs. Don't fall in love with one single ticker. It's okay to sell out of one and transition into a better or different asset. But the main thing is keeping your money in the market. And one thing we want to note about the holdings is every single month we are going to see this ETF do its rebalancing, because every single ETF is going to have its equal weighting, which some people may or may not like. Maybe you want them to choose what they feel is going to outperform that particular week, but they're not going to do that. They're not going to have any bias. And in my opinion, that's actually a good thing. It's very hard to predict the market and choosing the right stocks. So having an equal weighting across their entire WeeklyPay ETF lineup is, in my opinion, one of the better options that they are doing compared to other ETFs out there. And one thing that makes this ETF quite unique is it doesn't pay out every single Friday. It actually pays out in the middle of the week every single Wednesday. We can see in the dividend history as well as the distribution calendar when they're going to pay out. So usually it's going to be every single Wednesday. It does look like because of Veterans Day, that week is going to pay out on a Thursday. So definitely keep in mind the distribution calendar, the schedule, when it's going to pay out. But usually it's going to be every single Wednesday. And it kind of makes that middle of the weekday a little less terrible, because you're getting a nice paycheck from one of the most popular weekly paying ETFs, in my opinion. And it's kind of crazy to think that we have over 100 weekly paying dividend ETFs. We can take a look at stockanalysis.com, their weekly dividend ETFs list. It has a bunch of ETFs. Now, keep in mind, a lot of them on this list are actually going to be these single stock ticker ETFs, which I personally am not a fan of. A lot of ETF providers are just pumping these out left and right. But I think there is too much risk involved for my personal tolerance. So I like to have the ones that either track an index or has multiple companies inside of their ETFs. So there's only a handful of those. ULTY is one of them. It invests in 15 to 30 different stocks. YMAX is a fund of funds for the YieldMax ETFs. So you can definitely take a look at this list and kind of pick and choose which ones you like the best. But overall, a lot of them are going to be single stock ticker ETFs. So if you're into them and if you are bullish on these stocks, definitely consider them. But there's a lot of options out there that you should definitely consider. And I would love to make a revised tier list on the weekly paying ETFs, but right now there's just way too many. I think that would be like an hour-long video. So definitely let me know what your thoughts are on WeeklyPay. It's been performing quite well. And if you're bullish on the market, the stock market, definitely check this out, because you are going to get a lot of that upside capture. Let me know down below. Thanks for watching.